You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. And today, before we begin, I want to remind you that there is a website associated with this podcast, and that website is wealthformula.com. It's where you can go to get a number of resources, including access to some of our groups, including the Accredited Investor Club, which I do encourage you to join if you have not done so yet. And what's an accredited investor? You don't have to, apply for it. You either are one or you're not. Like, you're either pregnant or not. You make $200,000 per year with a reasonable expectation of doing so in the future, or it's $300,000 if you are filing jointly, or you have $1 million of assets outside of your personal residence. Those things are what makes you an accredited investor. So if that's you and you haven't signed up, go ahead and check it out, wealthformula.com, because who doesn't want to join a club? Now, let's talk about, I guess, a recurrent theme in this whole space, in the alternative space. Whenever you talk about the economy, you always hear people talking about the concerns about U.S. debt. And I guess the question is, and again, I'm playing devil's advocate here. I'm not saying one thing or another. I'm no expert per se in this area, but I mean, do debt levels even matter anymore? Conventional wisdom has always been, throughout time, that high debt levels lead to inflation and the destruction of currencies, right? And money printing also is bad, and that it conjures up images of Germany, back in after World War I, and images of wheelbarrows full of worthless bills and economies and freefall. Well, that's been sort of the prevailing thought, especially in those people who consider themselves of the fiscally responsible types. And the problem is that those people and the parties that represent them are pretty much non-existent right now, right? The political party that used to care about fiscal responsibility, the Republican Party, really, for what, and again, this is just facts. I'm not making any judgments. If you look at it, they've stopped really caring about debt. No one wants to talk about these things that they did even 10, 15 years ago, or let's say 20 years ago, when there was a different type of conservative party around, where they used to talk about the potential of reforming Medicare and Social Security, and in doing so, try to help with some of the issues around debt. Now, why do they stop? Well, part of it, quite frankly, is that these are not political stances that are popular, right? I mean, if you are getting Medicare and if you're in line for Social Security, you don't want people messing with that. You already paid your dues. There's not a lot of political will to change these things, despite the fact that they probably, I shouldn't even say probably, they most certainly are the biggest variables when it comes to debt. So instead, you've got the concept of modern monetary theory, which sounds a little bit, artificial, sort of doesn't seem real, because it's kind of not, right? But it started to creep into popular parlance, and basically the idea that as long as, Uncle Sam holds the keys to the printing press, he can rack up debt without any ramifications, that really there's really no rhyme or reason to it. As long as the, inflation is in check, as long as, some of these other issues are in place, the governments are allowed to kind of do whatever they want to manipulate their economies. I mean, that is in a nutshell. That's sort of modern monetary theory. I mean, I'm simplifying it, but that's basically it. It just sort of says that doesn't matter anymore. You can do whatever you want as long as, you keep some of these major variables in check. So, should we care about debt or not? That's the question. And quite frankly, I'm not sure I really, have a strong opinion about this, because it sure seems like no one else cares. On the other hand, my guest today, you'll see he's a traditionalist, and he's not optimistic about how the story's going to end if we don't do something about it. And so he's going to give us that perspective. And we will have that argument after these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Les Rubin. He's a professional accountant, entrepreneur, philanthropist and real estate developer. He's the president of the commercial real estate development company, Rubin Development Corporation. His passion for economics and economic education inspired him to create Main Street Economics Incorporated, a nonpartisan, nonprofit organization that provides the average person on Main Street the opportunity to learn about economic systems without going back to school. He's the author of The Greatest Ponzi Scheme on Earth, How the U.S. Can Avoid Economic Collapse. Les, welcome to the show.
Thank you, Buck. Glad to be here.
So tell us about the Ponzi scheme that is the U.S. government. Why is a Ponzi scheme?
Well, if you take a look at our federal debt and you see what is going on, we're at nearly $35 trillion of debt. We have no projection ever to be able to be a surplus so that we can pay the debt off. So the only way that we can pay the debt service and the refunding of the maturing obligations is to borrow more money. That's a Ponzi scheme.
Right.
The only way to pay old investors is to borrow more money, and that's a Ponzi scheme.
Right.
What it is.
So why is it that the government can do that and it's legal?
Well, I guess it's legal because they can do it. The government has a very big credit card, and we can sell bonds to the public or to the Federal Reserve or to foreign governments. And as long as they will continue to buy our bonds and feel secure doing that, then we can continue to fund our deficits. But we have no means to pay it back other than selling more bonds, because we run nothing but deficits in this country as far as the eye can see.
So I guess the question is the U.S. immune from bankruptcy because it can always print more money?
Well, when we get to the point when nobody will buy our debt, that's when the real problems start. Right now, people will buy our debt, and as long as they will, we can keep funding. At some point, the debt may get to be so large that people will lose confidence in our ability to pay it back and will no longer buy it. The next step would be for the government to just buy its own debt. That's called printing money. They would issue the bonds and sell them to the Federal Reserve, and we would become an inflation monster again, even worse than what we have now. If you fund all of our deficits by printing money, that's just a recipe for hyperinflation, and that would eventually lead to some sort of collapse or fiscal crisis.
You know, I talked to a lot of people who are in the sort of on the other side of this, and just playing devil's advocate. I guess the question is how realistic is it that an economy like ours could collapse? I mean, the rest of the world really is not any stronger than us, right? And so who's going to take over? It's not going to be China. I mean, China's own economy is in trouble right now. So I guess when you hear people say it sounds like very unrealistic, what do you say to that?
Well, that's a problem that we face all the time. People say, well, I've been hearing this problem for 20 years and nothing bad has ever happened. And it doesn't happen until it happens. And
right.
As they say, when you're going bankrupt, it happens very slowly. And the people in Greece in 2005 heard the same warnings. They actually did fail. Now, the reason that wasn't a worldwide problem is because they were small enough and the EU bailed them out. But if we fail, who's going to bail out the big kahuna?
Right.
Nobody capable of bailing us out. There's no EU that could supply multi-trillions of debt that we would need.
When you look at the budget, what are the biggest budget busters in the current U.S. economy? And I guess the question is, how can they be reformed?
Well, the answer is always yes. They can be reformed if you have the political will to deal with those problems. The two main areas that I see that are problems are entitlements, which are clearly a problem because they're running significant deficits every year. And the trust funds for Social Security and Medicare will be running out within the next 10 years. At that point, you have two choices. You either cut benefits dramatically, which is what the present law would require, or you pass new laws and just keeps busting the budgets even more. So entitlements are clearly one. It's Social Security, Medicare, and Medicaid are the three big ones, and the three of those collectively cost over $1 trillion a year to the federal government. The other area of significance is that we've grown our government so big. It was not intended by the founding fathers to have a government the size we have now. It intended to be a limited government, and the things not assigned to the federal government would belong to the states or the people. That's what Amendment 10 to the Constitution says. We've ignored that and grown our government, and we have multiple departments that were never even existed in the past. And so we've got the government big brother with unaccountable bureaucracy making rules every day that no law, no Congress ever passes. They just make them up, and that's creating an enormous amount of regulation in our society, and that's costing the economy. It's costing the government, and if we don't reform those two things, cut back the size of government and fix entitlements, I don't think we'll ever be able to balance a budget.
Or I guess the idea would be to tax our way out of it too, right?
Well, that's a negative from an economics. If you want to grow the economy, raising taxes is the backwards thing of what you would want to do. What you really want to do is keep the government smaller and taxes lower. That provides more investment opportunity in the economy to grow it. So economically, if you want to grow the economy and raise the standard of living, you want lower taxes and smaller government.
Right, right. You know, you bring up a good point, though. I think at the end of the day, one of the biggest issues with all of this is political will, right? In the old days, and I'm not even old days, I'm going to say 20 years ago or even maybe 15 years ago, there used to be a party that was more interested in, fiscal responsibility and that kind of thing. But neither party is interested in fiscal responsibility now. And all of these, you're talking about Medicare, all these entitlements, and neither party's talking about cutting them anymore. So what is the reality here? I mean, what is the realistic fiscal diet that we can go on?
Well, here's the issue. The Congress isn't going to do anything that's not supported by the public. With public support, you can get things done, and without it, you cannot. And the Congress is more in tune to giving away stuff to buy votes than they are to trying to be fiscally responsible. And we always know that people spend other people's money much less wisely than they spend their own. And that's what's going on. So Main Street Economics is the nonprofit I started. The website's mainstreeteconomics.org. And the whole purpose of that is to educate the voting public. I don't believe talking to Congress will work because Congress is not going to be responsive unless the public is on board. So that's where you get to the will. Congress will do it if the public is on board, and they will not do it if the public is not on board.
So the expectation and the hope, I guess, is that the public gets educated and knows that there is a Ponzi scheme going on, is willing to sacrifice entitlements that in many cases they think they deserve, right? Isn't that a challenge?
Well, I don't think you can sacrifice entitlements. They're here to stay. But what you have to do is reform them. If you want to reform them, and I have a plan in the book that shows how we can convert to private accounts over a 20-year period. It's a conceptual plan, and I'm trying to get it modeled now. But the first thing in entitlements is you can't cut benefits. If you do that politically, you're dead in the water. Mm-hmm. So you got to start with the premise that you're going to hold benefits at least equal to what they are now, and then reform the system so that it works. That may change age retirement age. It may convert to a private system. There's many different ways you can reform it, and it may include a little more fees. I mean, all of that may be part of the program to reform it. But if we don't reform it, it's broken. Right now, we have 2.3 people working for everyone retired. In the old days, it was 15 to 30 people working for everyone retired. So the demographics don't work. We live longer than we used to when it was Social Security was originally done in the 30s. People lived to 65. Now they live to 80. And so you have a retired workforce, and you just, the numbers don't work. The demographics are completely out of whack, and the trust funds are going to be gone in the next 10 years or less. At that point, if you follow current law, you will have to cut benefits. And I want to avoid that by reforming the systems now. That's what we need to do.
Can you talk a little bit more about the reforming? For example, how does privatization, how would that potentially help?
If we had a system where everybody was contributing to their own, effectively like a 401k program, it would be they would own the asset. It wouldn't be a tax to government. It would be a forced retirement plan where you would take maybe the same amount of money, the 12.5% that we pay it now, put it in your own account. It's got your name on it. It's your asset. It's not a tax anymore. So you build up your own account over time, and then you would have a much more substantial retirement income when you retired. If you did that for 40 years at a reasonable rate of returns, 4 or 5%, you would have a lot better retirement income than you have with the current system, and it would be your asset when you were to pass away at some point. If there's anything left in that, that goes to your heirs, not to the government. So that's a much better system. It's been incorporated in many countries. They did it in Australia in the 90s. But the problem with that is there's a capital cost. There's a lot of capital built up needs. That's why my plan was to do it slowly over 20 years to convert to a private account system as opposed to a tax. Then everything you pay is a private investment to your benefit. It doesn't go into the government as a tax.
What can the U.S. learn from Switzerland's economic reforms?
Well, Switzerland is probably one of the best managed countries in the world. They went and installed, and they had a vote to install an amendment to their government called the debt brake. At least that's the popular term, the debt brake. 87% of Swiss voted in favor of that. And what that does is it controls the growth of spending. And so that it means that you're going to, on the average, grow your government slower than you grow your economy. And if you continue to grow the government at a very small rate and the economy would grow faster, then slowly but surely the debt ratio to GDP would get smaller and smaller. As you probably are aware, right now we're about 125% debt to GDP, and the current projections, if nothing changes, will take it to 165% over the next 30 years. That's absolutely unsustainable, and it will lead to a lack of confidence. You already have all the rating agencies downgrading our debt. You also have situations where the demand for debt has slacked to some degree and the volume of supply has gone up. So you really are getting to a point of imbalance right now. It isn't to the crisis point, but it's heading in the wrong direction.
How much time do we have if we do nothing, do you think, in terms of, a potential collapse of this Ponzi scheme?
Well, as one of my partners in this endeavor says, only God knows, and he's not talking.
Okay.
We don't know the answer to that question. I can only speculate that I think it's 10 years or less. And I have no real way of knowing the answer to that question.
So how can you prepare yourself if that's sort of potentially inevitable? I mean, assuming that, political will's not there, U.S. public is not going to change its trajectory, its mindset. How can you protect yourself?
I've asked myself that question about 100 times, and I never come up with a very good answer. Because if we ever get to the point of failure, where we literally cannot sell our debt, the whole monetary system collapses, and there is no good answer at that point. You could try printing money for a while. That would just lead to hyperinflation. We know what happens when you print money excessively. We're feeling a little bit of that pain right now from what we did in the 20 and 21 period when we printed money very rapidly. Now we're paying the price with high inflation. And it's hard to get it down, hard to get the inflation down, because we keep priming the pump by putting more and more money into the economy by running these $2 trillion deficits. And so the aggregate demand isn't declining, therefore the inflation isn't declining.
Part of the problem too, I think with these solutions is that we're so focused right now on inflation and high rates and all these things that probably debt's the last thing on people's mind. Are you worried about that too?
I am. That's the reason I started Main Street Economics, because if people don't realize that we have a crisis coming, they won't ever pay attention to it. So my whole objective is to alert and alarm people to the problem and get them to say, we have to fix this mess. The fiscal insanity that's going on in Washington is going to drive us right into the iceberg. Our ship of state is aimed at the iceberg, and if we don't change course, that's where we're going to end up. And if that happens, it's a disaster for everybody.
Well, with that, we'll leave it there. Your website again, it's I have www.greatestponzischeme.com. Is there another site?
That's the landing page for the book. The actual website is Main Street Economics, that's plural, .com.
Got it.
MainStreetEconomics.com. And from there, you can go to the book sites, and there's a lot of information and videos and articles. I do a weekly email on different economic subjects. All of that's posted on the website.
Got it. And then this is, again, the book is The Greatest Ponzi Scheme on Earth, How the U.S. Can Avoid Economic Collapse. Les, thanks so much for being on Wealth Formula Podcast.
Great. Thank you for having me, Bob.
We'll be right back. Welcome back to the show, everyone. Hope you enjoyed it. And, well, I don't really have a significant opinion on this matter. I do think that I used to be sort of hardcore, we got to do something about the debt. But, it seems to me that we've already kind of got this modern monetary thing rolling, and there's not a whole lot we can do about it. I would just say this much. As much as Les has I think he is optimistic to the extent that the American public is going to change its course because of education. I hate to say it, but I think that's kind of giving us too much credit. We generally are into the short-term fix, and so addressing these things is not going to is going to be really difficult for any politician to take a stance on. So we'll see how it goes. I'm hoping that he's wrong, that there will be some sort of reckoning. If I had to guess, I'd say there was probably some kind of reset of some kind that will happen maybe in the next decade or two. I'm not sure that it's I don't really subscribe to the idea that there's a cataclysmic event that takes America down the road of Greece. We're just too big of an economy. We are the least ugly economy in the room, and so I guess I'm more optimistic than than he is. But what do I know? I'm an ex-surgeon. Anyway, that's it for me this week on Wealth Formula Podcast. Hope you enjoyed it. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.